Hi, this is Zak Mir with the Bulletin Board Heroes here at Zak's Traders Cafe for Wednesday, the 21st of August. Starting off with the FTSE 100, which has got blocked basically in the 8400 region. We were hoping that support would come in around 8280, which it's trying to do at the moment, but have to factor in that we might have to test the floor of that rising trend channel from September last year. And the 50-day moving average around 8210. RSI at 53, so still on the right side of the neutral 50 level, and then giving us a slight bias to the upside. But to the moment, 8400 looks like hard work, and 8210 has to be factored in as potential support. Next up is the DAX, and here the picture is that we've had quite a rocky ride for so far in August, and hoping that the latest push through the 50-day line there, 18,100, will lead to a break of the May resistance line there, 18,600. If we can do that, then we could be looking at making new highs up towards the 20,000 area by the end of next month. On the downside, though, still have the risk of a retest of the 200-day moving average area towards 17,600. That also ties in with that April support line projection. RSI at 57, so in the right place for a further recovery after the double gap fill turnaround that we've had. We had two gaps down and then filled them pretty quickly over the last week or two. The Dow is next, and here getting a bit of a volatility, I suppose, from the political situation, but nevertheless looking relatively steady given that particular scenario. Here you can see that we've been knocking on the door of that resistance line there from July. 41,000, want to see an end of day close above that to give us a move up towards the top of that rising trend channel from this time last year as high as 42,600 by the end of next month. That seems rather ambitious, but at least while we're above a combination of the floor of the latest gap, 40,000, and the 50-day line, that is certainly possible for this market. Bitcoin is next, and here the picture has been rather complex as well, rather frustrating as well. But the main thing here for this market is supposed to be on the right side of the 60,000 level, and also the right side of that rising trend channel from the end of October. The current level there almost exactly on 60,000, and we've been trading either side of that over the last few sessions. Below 60,000 still have the risk of a move down to that February support line projection around 51,800. Otherwise, we're hoping for a break of the 50-day line there at 61,000 to take us up to 70,000 over the next few weeks, maybe by the end of next month now, given how slow the price action has now turned for Bitcoin. RSI still below neutral 50 at 47, which does give the impression that the technical glass here is half empty rather than full, and that we will fail again at that 50-day moving average. Moving on to gold, where all the technicals gave us the right steer in terms of the price action. We were looking for 2,600 by the end of this month, and we could even be up to as high as 2,620, which is the top of that rising trend channel. That was obviously that line rises over time, that channel from back in December, and looking for 2,600 plus over the next couple of weeks. While we're above the 2,500 area. Recent support intraday around 2,520, so ideally we hold above that ahead of an assault on 2,600. Moving on to the stocks, and starting off with Amigo. This is one of those rather frustrating situations where you don't actually know whether the company is going to be on the market or stay on the market. And obviously the fundamentals are equally binary, but at least we have seen over the last, this week basically, the shares hit or break through the 200-day moving average, currently around the 0.22 level for the first time since the end of 2022, which may be significant. Obviously you can see that the resistance there of late, basically over the last year or so, has been into the 30s, so maybe that is a direction of travel for the stock while it remains above or within that rising trend channel from back in October last year, the floor of the channel there at 0.2 pence. Onto a stock which has become, say, a favourite of mine, but has the prospects of being a decent recovery situation. Looking at Clontarf now. And here you can see a rising trend channel that's been in place since basically the beginning of March. Top of the channel there, basically level with the spike that we had last month around 0.15. Looking for that maybe as soon as the end of next month, while we remain above the 50-day moving average and the floor of that channel there around 0.08. You can see the shares ticking up as we speak, or as I speak, in fact. Moving on to a stock which has been championed here from the start, or almost from the start, from below 10 pence. We had all our targets since then. The first one being basically up towards 24 pence, and the second one up to as high as 36 pence. We're looking for a fresh move to the upside with these multiple support points above the rising 50-day line, so the next level up could be up to 45 pence by the end of next month, and probably the rally even more impressive given the way the company has been raising money all the way up. This stage only well below the 50-day line, and 30 pence really delaying the upside scenario. We've already had a double bounce for the RSI neutral 50, and that is a continuation signal from that particular indicator. Not quite so sprightly for Galileo, but you never know. It may be able to deliver the goods over the near term. Here the whole sort of prospect is that we could break outside that little triangle between 1 pence and 1.5 pence, and if we do that after such an extended stay in this range, we could see the shares then head towards a resistance line projection from back at the beginning of last year, heading towards 1.8. We've been looking for that for quite some time, and I suppose the longer it takes, the greater the prospect of perhaps a powerful move through the 1.2 to 1.3 pence area for Galileo, but obviously it hasn't happened yet. Heiq is a stock which is noteworthy at the moment on the basis that we're trying to see whether the recent recovery for the shares will continue. What we have here is a potential rising trend channel base, top of the channel there, heading for the 17 to 18 pence zone. We're looking for that, but obviously we need to see a break of recent resistance at 12 pence, which may be a bit sticky given the way that both the 50 and 200-day moving averages are both falling. But at least while we're on the right side of 10 pence, we've got the prospect of a push up towards that upper teens area. Frustration continues at Hummingbird, even though the funding situation would appear to be sorted out from its benefactor, let's say. Here we've had a gap down earlier this month. What we want to see now is at least an end-of-day close or support for the shares above the top of that gap there at 7.7 pence, which is basically where we are at the moment. If we can do that, then it would be a journey back towards 10 or 11 pence, maybe over the next month or so, maybe by the end of September. One would imagine that the strength in gold will eventually filter through to the company. Another company which has been on the back foot in terms of its share price has been Jubilee. Had an operational update today, but we have to see that, or we have to say that the shares have been rather stuck at the lower levels. Nothing really to break the pattern of the bull trap that we had through 8.5 pence back in May. And we still have the risk of testing the main 5 pence to 6 pence support zone for the stock over the near term. The plus point at the moment, though, is the way that the 200-day line, currently around 6.3 pence, is rising. And while that is the case, there is a chance of that dragging the share price up and giving us the turnaround that the bulls have been looking for. If pushed, I suppose we'd be looking for support over the next week or two to come in at that uptrend line that I've just drawn there from back in November at 5 3/4. So maybe that would be a target area for a potential rebound. Moving on to Kazera, and this has been something of a star over the near term. What's noteworthy here is the way that the shares have managed to continue on the recovery that we had. We gapped up through the now rising 50 and 200-day moving averages Just missed our target there, 0.8 pence. Hopefully we'll get that relatively soon. But above 0.8, looking for the upper parallel of that rising trend channel base as high as 1.1 pence by the end of next month. That's on the basis that we're in the run-up to a golden cross between the 50 and 200-day lines as they're both rising. And the run-up tends to be the strongest part in the cycle. This stage only back below recent resistance from June, around 0.6 pence, really delaying the upside scenario. Double RNS from MTI Wireless today, extending the share buyback and decent results as well. Obviously, the market not the biggest fan of this company, and at least what we can see now is that we've got a rising trend channel there from the summer of last year. The shares have bounced off the floor of the channel with a gap, so it's a bear trap. In fact, it's an island reversal, bear trap island reversal. So maybe this will be the time when the shares at least get up to the top of the channel there, as high as 52 pence by the end of next month. What we'd like to see is a weekly close above the 50 and 200-day lines at 39 pence plus. OPG has been trying to recover of late as well, and here you can see that the price action looking rather stronger than it has done in the past. We've had a bear trap rebound from below the July support, 9.75 pence, and above that, looking for the top of that rising trend channel from basically this time last year as high as 14 pence by the end of next month. You can see that there is the prospect of rather more than that. If we can get up to the initial target there, 14 pence, then there would be a fresh resistance line target there from 2021 as high as 19 pence. But the key, as I said, is to stay above 9.75 and head to 14 pence by the end of next month. On to Oncimmune, and here the picture is that we've got a recovery that hopefully will continue to have legs, basically a U-shaped turnaround, gaps on the downside, gaps on the upside, which is normally very encouraging. Initial target hit there around 15.75 pence, and now we're looking for the 200-day line just through 20 pence, which is actually starting to rise, so that is quite encouraging in terms of a turnaround. Maybe we get up to 30 pence early in the autumn. On to the last two. The first one is Rome Resources, which I managed to forget including yesterday. Here you can see that we've had the shares trying to find support just near the 50 and 200-day moving averages, around 0.27, 0.28. Expecting the stock to rebound from these levels. That was basically the support there pre the current arrangement for the company in the autumn of last year. And hopefully the upper 20s will then give the shares a springboard up towards that resistance line projection from back in the summer of last year as high as 0.45 pence plus. But keeping a watch on that, especially looking for a break back above 0.3 pence for that situation. Finishing off with the star of the show today, which had a bumper RNS and bumper contracts, I believe. Here you can see that Roslin has gapped up and should continue going, given the way the 50-day line is currently rising around 9.25 pence. We can get a decent end-of-day close above the 200-day line at 12 pence, looking for up to 25 pence at the top of that broadening triangle from back in the autumn. The big sizzle here on a technical basis is that we gapped down back in March and have gapped up now. So it's a bear trap island reversal, one of the strongest formations, if not the strongest formation in charting. That's it for me today. More updates tomorrow.